market monitor tonight is cautious on stocks, but says investors should be focused on yield and opportunities that will be coming in the energy sector. Channing Smith joins us now, co-portfolio manager and managing director with Capital Advisors. Channing, welcome. What makes you cautious?
Oh, I don't know if we're cautious. We don't see a bear market. We don't see a recession. And until really investors start to fear central bankers or lose confidence, we don't really see a big market downturn. We're just trying to be realistic. And if we look at valuation, that's what's really concerning us. So you look at the Shiller PE, which is a cyclically adjusted PE, which takes the average earnings of S&P companies over the last 10 years and divide that by market price, it's at 27. And we've only, in the 134-year history, been above this marker. So we're just not seeing a good valuation opportunity, Tyler.
So how are you finding opportunity? What are the metrics that you are using in a market that is either fully valued or slightly overvalued in some stocks in order to invest cash?
So we're really looking for dividend yield, and that's what we want to see. We only expect to see 4 to 6% annual returns really going for the next couple of years. And if we can find dividend stocks that are paying 4 to 6%, we're going to take that. But they're hard to find.
Let's look at a couple then, shall we, Channing? Starting with Wynn Resorts.
Yeah, so Wynn is really, we're looking hard to find opportunities. Wynn is a casino operator. About 30% of their business is in Las Vegas. About 70% is in Wynn. They've struggled really the last couple quarters. The stock's down about 40%. They've had trouble with visas. There's an anti-corruption campaign in China, so that's hurt their near-term results. But Tyler, they're paying over a 4% yield. They've paid a special dividend the last 6 years, and we think that they'll pay another dividend yield, special dividend yield at the end of the year. It's usually between $1 and $8, so you're looking at a potential yield between 5 and 10% for Wynn Resorts.
Next is a pick in the energy sector for a conservative investor, you say. Some people say ONEOK and some people say ONEOK, but that's the pick.
Yeah, so ONEOK is a way to play energy very conservatively. It's a 5.5% yield. They own pipelines, and they move natural gas, they move natural gas liquids all over the country, well run. They get paid for moving the product. So they do have some commodity exposure, but we think the dividend is very secure and is a way to play energy and get a 5% yield. And
Continental Resources is your third pick, more famous lately for the divorce of its CEO and founder.
Yeah, it's a riskier play. This is really a play on the commodity price itself. This stock was at 80, it's gone down to 30, it's about 43 or so and change today. If you believe that energy prices are going to be in that $60 to $70 price range, really about 6 to 12 months out, this stock has a lot of appreciation. They're very well positioned in the Bakken, they're very well positioned in Oklahoma and what's called the SCOOP play. We think production growth here is going to be enormous, and so it's a little bit riskier play. If oil prices go down in the near term, this stock is going to suffer. But over the long term, we really think that this stock has a lot of appreciation potential.
All right, Channing, thank you very much. Have a great weekend. Channing Smith with Capital Advisors.